Another back to basics series on how to draw the points of control. Let's go.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at eXp Realty, aka the Trading Agent, and this is another back to basics series on how to draw the points of control within a chart. I get asked this question every once in a while. My good friend Lupus just asked me, he was like, can you do a better video, or at least a video on such, so that it can be a little more clear? And of course, if you ask, you shall receive, because sometimes these things are not as simple to see, but they have to be fluid. So let's talk about it. Again, if you're newer to the channel, please check out the Discord room. Link is in the description below. I have all of these videos saved from YouTube. Again, that's where all the main content is. We talk about this stuff constantly. This channel is really built to help traders who are trying to develop their edge, and also, with experience, try to figure out how to win more consistently. Because again, trading is a probability game. Anyone who's guaranteeing victories and wins always is usually suspect. On that note, let's get into it, because this question is a good question. I think I have a ton of videos on support, resistance, trend lines, channels, the points of control, or what I consider like the chop zones of importance. Why do they form? Well, a lot of people don't even understand like the basis for what they begin with. Well, usually these points are what the market makers are using to trigger volume and action. Now keep in mind, the market makers in general are a what? They're looking for inventory. Again, there's no reason to mark up or move a stock down if they don't have tons of inventory. And without inventory, the game really isn't played. Now, sometimes it can be as simple as one little spot, say a big round number, for example, like say QQQ 290, say whatever price you want to say, like a big round integer. But what you'll find out over time is that these prices in areas are a little more elastic. They're not tight. Because one of the things that people have to realize is there's tons of stops usually around these points of control, and that's what the market makers need to hit. They need to hit yours, my stops. Because the thing that people don't realize is that your orders, if you have stops through your broker, are fair game. They're visible to everybody. And everybody meaning the broker seller information. If you put it out there that your stop is at an example, say, for example, say it's 295 on the QQQ here. Well, everybody knows it. They sell your exchange information to other institutions, investors. So just is what it is. But people get mad about it. It's like, well, just know that they know that. And so this is where becoming a better trader and understanding these little things really helps. So let's start it off by, I always tell people, think about a few things that you need to have in your mind when you're drawing these things. One, you got to be flexible. Drawing these very tightly to an exact price. Again, as I say, don't bring a ruler to trading. Don't bring, engineers struggle with trying to be exact with how to pick a point of control. So be flexible. I also look for high volume lows, high volume highs. So if you're looking at the QQQ right here, the first biggest candle of volume right here is this guy and gal right here, right? We'll put that. Another one is going to be what? Right in here. This high volume, high and low. Now again, always think of it the highs and the lows, because what happens usually on big volume days is what? The extremes are usually pretty, what I would say, high volume, in the sense that capitulatory or potentially, excitement, people chasing. So you get to really see that. And now again, the Qs right now at this point, we can draw it on this chart. I'm going to dig around this. Again, give yourself a couple minutes to watch this video, and let's think, and I'll explain to you gals, why this really matters. So if you're using the high volume low here of this candle from 511, you can draw that wick. Now here's the next part. Okay, look at the most amount of candles that change direction or confirm direction. Well, this guy right here seems pretty important, right? That candle right here from 610. You notice here this 3-day range, right? From 519, 520, 523. That seems pretty important. You can see this candle right here had a top. You see these candles had tops. You see that candle has a top. You see that candle had a bottom right here. And you draw that across, and you might say, well, that looks like a point of control. Now you see the most two recent days. That to me seems like the point of control right here. And again, the more candles that inflect, change direction, have wicks, have some sort of confirmation of a change or confirmation of a direction going in one, the confirmation of the direction, the better. Now people say, well, that's a pretty wide price, $291 up to $295. Well, look at now you stretch it over and you can see, well, does it make sense why it could be? Oops, let me draw this. Let me try to stretch this guy out. And notice where it is. Happens to be involved with the volume at price. You see that? None of this is a coincidence. I try to explain this to people. So you got the volume at price. Make sure if it's trading view, it's volume profile. The most amount of candles, directions, changing, confirming, or wicks. And then high volume highs and lows. Be very aware of those candles because they're very emotional, right? And then again, you could draw this up a little more if you wanted. And this is the thing, don't make it perfect. What you're going to see, if the VIX is higher, you could probably blow through these levels very quickly to come back into them. And if the VIX is lower, what you'll notice is that these levels sometimes can be tested multiple times, chopping around. So the biggest thing that people have to think about is, all right, you expect retest, you expect action to touch these levels. It's just really hard to be patient, right? Because I had in my mind, and I'll show you the previous point of control, I thought this might be a good starting point for the market, which it was earlier in the week. This level here, right? You can see it. Here's the lows of this wick, low of that wick, indecision, and chop range. And notice it was the highs of Friday. Now again, you can zoom in to see these a little better, and I think that helps. Let's go to it. All right. I apologize. Let me get the 10-minute. It's like I've never driven on this. And you can see, okay, here's a 10-minute of the cues, right? I mean, even if you want, you can change it to the hourly. This makes it easier. But you can see how the points of control line up with the volume at price, right? Like this is a big volume at price node, right? This is a big volume at price node. Well, here you go. You expect it to probably hold down around here, right? Look at all the support resistance, support, chop zone, held it. And notice where it's bouncing. Now again, if you want to open it up a little bit, that goes from 390 to 393. This is what the stuff I'm looking for. And it really helps sometimes with trades. Because, for example, I think a few of you guys traded Netflix with us a couple weeks ago. Or I guess not a couple weeks, this week, previous week, whatever, it doesn't matter. And it was a pretty simple trade. And you could have played this game over and over and over through a chop zone. You can see the high of the range. And again, if you want, all these wicks, kind of color it up. Every time it got up to here, it didn't last long. You could say the same thing about the bottom. Right? Support. So, again, if you can't see these, and it just takes practice. You know, again, volume at price. You got to be flexible. Can be a little wider and looser than you think. This range actually changed because I remember the first times we shorted it from 229 to 229, and then what? I mean, you could actually probably argue maybe there's two. You can create two little zones. You know, you could say this is one right here, right, and then a more recent one of what? You'd say right in here, right? It's just a matter of how direct you want to make this, like tight or looser. I prefer to keep them looser on the bigger daily trends, and then intraday tighter, meaning smaller zones, right? Like if I'm day trading this, I need to know that this works right here, needs to work right here, needs to work right here, right? Short there, because then I get what? I can tighten my stops up. That's really important because, again, especially with day trading, you're going to want to have tighter stops, right? It just makes sense. So let me change this back to the 10-minute real quick, and then go back to the daily. And let's just bounce around, and let's just pick. I'm going to pick charts and update them as I feel they seem very obvious that there's points of control. Let's pull up let's just pull up Google, for example. All right, here's the high volume low, right? Here's another retest. Well, I'm pretty sure you can see the big VAP zone. But let's zoom out, because sometimes you can see from the past how these VAP zones develop. Look at that, right? So this is where being able to zoom out can really help. All right, there's clearly a VAP zone right here. What? In this area, correct? Would we not argue that? So if you're looking at Google, you'd say it probably needs to hold this 101 to 107, right? That's going to be a point of unlocking volume. You can see here's another one, right? Now, again, it gets really congested there. I'm probably not going to do that, but I'd rather maybe zoom in and see, okay, well, you see the point of control is here, the highest volume, but look up above. Notice this was resistance, right? Notice this was support. Once it broke through, it was gone. I expected to get up to there. Well, it didn't. Well, what was it? A trend line that ultimately hit. Again, people, you can draw these after the fact. They look a little easier, but I would argue just in general, if you're watching Google, you got to watch what? All these wicks, the top of these wicks, right? This candle high to that range high. Now, not perfect, but, resistance. Got up at resistance for a couple days, got over it, broke through it. Now, as you're seeing, this isn't an exact science. So I always tell people, you got to be thoughtful that you can be wrong, but also try to do this as best you can. You're not going to be perfect. I'd love to say that zone, it was the upside target. Well, you got close enough for government work, right? That's why you draw trend lines. That's why you try to watch things, right? Let me close this out, take this away. Because you might be able to argue that, well, maybe this is a tight one. And then you can draw one based off of this. I guess that's a gap down. That little guy, doji down here. But maybe you say it was this reference right here, all of these. And you might be able to see it easily, on a 10-minute. Now let's go to the hourly. Now again, I'm just pulling charts here. I apologize, this did not line up. Where are you, Google? Tried to freeze it. And this is where trying to do this on all time frames, shorter time frames, maybe, apologize. Let's do the hourly. Let's keep it really, really simple. And you can see how this stuff forms. And this is why I always talk about layering into trades. If you guys are newer to the channel, we talk about it because people expect perfection, right? They expect one touches. And it's you can day trade around one touches. But I would argue it's better to what? I wouldn't trade around. You expect retest. I always tell you, don't pretend this game does not have retests, right? Chop zones, points of control. It's really hard to just assume one touch. Now you get one touches here and there, meaning you'll hit something and you'll just like this, boom and go, right? But typically you get choppy tops, you get choppy action. I mean, even at the highs here, you had within the hour multiple touches. So preceding swing changes, again, it all depends on the velocity. You drop down hard, well, maybe you bounce back harder. But you see particular chop zones. And this is the thing. So if you're looking at Google, for example, you're starting to see the support zone. You're starting to see someone's buying down here, and you're seeing a floor. So people talk about, well, you layer in. Well, we'll say you want 1,000 shares, and you buy 300. And if it would have taken off without you, well, what happens? Well, now you got another retest, so you could buy another 300. Oh, you thought it took off without you, but then you start seeing there's a high end of range, and maybe you trade, take 200 off. Now it comes back, you do it again, you buy 500. This is where people who get, I would say, watch too many charts, watch too much stuff, what happens? They get inundated with too much, I would argue, evidence, trying to pick so many things. This is, for example, CRM. We talked about this at the lows. wasn't a big deal. Watch the zone. Went a little below it, holding here. You either blow through it, it's very binary, or it holds. And how high could it go? I don't know, 15, 16 points. I mean, if it's a bear market slash like rally-ish, yeah. I mean, you can see very simply how the charts line up over time. You can look at the tops, again, volume at price, where the most amount of candle direction change. And if you find high volume highs and lows candles, those sometimes are very important. I mean, it seems like this is a crazy spot, but it's like, yeah, I mean, there you go. There's one. Let me line that up. Boom. You can see the candle right, let me open it up for y'all. You could say right there was a point of control. Hit it there. Bust through it. Tried to get below it. Closed above it. Chopped above it. Couldn't get above it. Got above it. Had a wick. Whole day candle closed there. Just think about it. More points of reference, the better. All right. I hope this helps. If you have questions, you're in probabilities. You have to think about even probabilities when you're drawing these things, how important they're going to be. I hope this helps. Stop by Discord room. I appreciate you guys. Have a great weekend of studying. Don't be scared to dig deep into this stuff. I told friends like them watching football games, I'm digging deep into the charts. That's what you got to do. You got to be a student of the game. Talk to you later. Bye.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.